It's Brian Preston, the Money Guy.
All right, so let's talk about the next big money solution or big money problem that we see over and over. And this one is a high cost of living.
This is one, I just had this conversation yesterday. Got my annual physical, and I was talking to somebody at my doctor's office. Kristen, shout out to you. Because she came up and she was like, man, I just want to buy my first house. And we've seen this with Nate and Daniel too. And I do feel for young people right now who are trying to get their own piece of the planet, essentially, by buying their first house, because this is a weird time. I mean, just here in the community I live in, people who bought houses in 2019 are now selling houses in my neighborhood for 50% more than they paid 2 years ago. And somehow they're getting multiple offers. So a lot of you are like, high cost of living is a true risk that I have. How do I get into housing? We have used cars, which I tell you guys, cars are napalm, financial napalm to your life because they depreciate. And all of you guys are like, what are you talking about? Cars are awesome right now. You know, in this crazy world, we actually make money off of used vehicles. I do want to give you one thing, and is this too shall pass. We're in a very unique time right now. I know that that's worth about a nickel and a cup of coffee, but we're going to give you the actual solutions of how to deal with this. But I feel for you, and that's why we wanted to kind of address this, give you some thoughts, but some of this is just going to have to be hang in there, and your opportunity will come, because just like when we have inflation and other things, there does come wage increases, or there are behavioral things you can do. Even if the wage increases don't happen because of inflation, there's things you can do to put yourself in a better financial situation.
Yeah, I think right now it's easy. We all focus on housing because that's what we're all seeing so much. It is a white hot market right now. But what's interesting is I don't want you to feel like this is isolated to you or your part of our country where you are, because a study found that 44% of Americans cite the cost of basic living expenses as their biggest financial concern. And this is how they broke it down. 17% of respondents said that healthcare costs, either now or in the future, are their biggest concern. 10% said that college expenses, so I'm curious to know if this is young people saying college expenses or maybe parents talking about college for their kid. 9% of respondents said the cost of owning or renting a home was the thing that gave them a lot of pause and made them lose sleep at night. And then 8% said that just overall high cost of living and or inflation, the cost of living increasing through time, is their biggest concern. So this is not isolated. This is not something that in one part of the country people are feeling this. A lot of folks, especially I'm going to say young folks, life gets expensive, especially when you come, you're 16, 17, 18, and all of a sudden you start in your first job and you start in the real world, and you're like, man, well, this is different than it used to be. This is sort of eye-opening.
I think about my 20s, the shock and awe moment when you realize how much more expensive adulting is than you thought. And then fast forward and you get into the next decade or next season of your life where, you're trying to figure out bigger, housing arrangements because you have a growing family, you have kids that are expensive. That's why we call it the messy middle. So, I mean, it feels like life is a little unbalanced in the fact that while you're struggling to you're not in your peak earning years, it seems like you have the most life things pulling at your back pocket between just getting started, getting foundational, and then you've got the messy middle. Meanwhile, we know every one of those dollars is the most valuable dollars because whatever you invest in your 20s and 30s has got an exponential multiplier on it that you'll never get that opportunity again. So we think, how do you navigate this is you just need to kind of understand guidelines or have a plan. Create a plan. Don't just float through life. We have created, and we're going to give you some of the steps, but we've created the 9 steps of the financial order of operations. If you go to moneyguy.com/resources, this is going to be foundational, but we've gone ahead and we're going to go a step further on this show and give you some of the guidelines of what are the basics you just need to kind of pay attention to as you're trying to figure out how you turn your little into a lot for the future.
I think for all of us, we don't get to choose whether life gets expensive. I just think that it does. You said it. As life happens, it naturally becomes more expensive. So hopefully these guidelines will allow you to keep you on the right path towards building financial independence. And here are some of the Money Guy guidelines we're just going to throw out to you. Number 1, make sure when you start, you have your deductibles covered. That is why it is step number one in the financial order of operations. This is I think you call it the don't go in the ditch or get you out of the ditch.
Keeping your life out of the financial ditch. Because look, what you don't want to do is have something in the grand scheme of it that's smaller, but just because you're in a tight pinch where you need capital, you end up making desperate decisions to cover the basic things, like whether it's a health insurance deductible, whether it's your homeowner's deductible, or just a car repair causes you to get in credit card debts and all kind of other things. You make desperate decisions and you never get to focus on actually building wealth. That's what we're trying to protect you from. So go ahead and build up some savings to cover the worst of things that could come your way financially.
And look, if healthcare expenses are something that you are concerned about, I mean, we said the number, there's a lot of Americans that list that as their biggest concern. Make sure you understand what resources are available to you. If you have a highly subsidized Cadillac health insurance plan available through your employer, take advantage of it. If you have a high deductible plan, but maybe you're young and healthy and you don't have a lot of healthcare costs, think about utilizing a health savings account. Think about building up tax-free dollars so that you can offset some of those costs in the future. Make sure, if that's something you're concerned about, there are ways that you can attack those concerns.
Another guideline that we see after you just having the basic cash for the emergencies is just being careful with debt in general. And primarily, we talked about here, I know for younger people or even parents who are planning for college expenses, try to be realistic with student loan debt because that is a new thing. I hate that it is kind of creating a sense of hopelessness with a lot of families because student loan debt has become a true tragedy in something so positive, which is education. So the guideline we give here is make sure that your total student loan debt doesn't exceed what you think you'll make in the first year. And the best way to do that is go ahead and look at what your major or what your child's major or your grandchild's major will pay in their first year out of college, because you can research that. The Bureau of Labor Statistics and other things post all kind of great guidelines. We've covered it in shows. If you'll just try to keep your first year salary and then keep the student loan debt below that, I think you'll be in a good place. Now, look, I know there's exceptions between attorneys and doctors, but that's a little different. This is just basic stuff. And then one other debt that I think people get in trouble with is car loans. I know they're going up right now, but we give the guidelines of 23.8, meaning 20% down, 3%. 3 years amortization, no more, and then 8% of your gross income. And don't go buy the luxury brands until you can essentially pay cash, 12 months, same as cash. And then also make sure your investments are bigger. Your monthly investments have to be bigger than your monthly car payment. All those things will keep you, on the right track, even with your basic debt management.
A number of Americans also said not only is it healthcare costs that they're concerned with, not only is it college expenses, they said, one of the big things that keeps us up at night is the cost of housing or the cost of rent. How do I do that? Well, here's our money guy guideline on that. If you are purchasing your first home, give yourself a break. Take a deep breath. It's okay. The 20% rule is a great rule, and it's wonderful if you have the means to do that. However, don't let that be something that prevents you from making this huge life choice. We give you some flexibility. On your first home, we think it's okay to not put down 20%, but you only get that pass on your first home. For any subsequent homes, if you want to upgrade in the future or move to a different area or do something after that first home, you do have to put 20% down.
And then the last thing we had on here was more of just an umbrella item that sits on top of all this, is just this unique inflationary period we're in. And this is not the first inflationary period we have been experienced by our country, and it won't be the last. But when these things do pop up, because we know general inflation is 2-3%, but now we're in a period where it definitely feels like when you look at automobiles, when you look at housing, things are moving much faster into double-digit territory, and that gets kind of scary. Guys, remember, inflation, your best friend is to actually own stuff and then invest in yourself, meaning in what your future earning potential, because that's going to help you battle inflation. Is being a person that's not renting your life but owning your
Owning it,
life.
that's right.
Is because think about all the inflation hedges, the ones you stereotypical, you hear about real estate and things like that, and now Bitcoin new on the scene. That remains to be seen. I'm not going to go into that deep dive,
Sure.
but I still say what people always forget is that diversified portfolio, or that portfolio that owns good companies, is also a great inflation hedge, because companies always have the ability to raise the prices they charge for their goods. Yes, in the short term, they might bear some of that while they're trying to figure out where the market is, and that's going to create volatility. But in the long term, you're going to see companies raise prices that will flow down the income statement to revenue, and then eventually net income. You can get a portion of that through your investments, and that's a great inflation hedge.